All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off with the S&P 500, we can see that we had a very choppy week here. It gapped down, flush all the way down to that 420 level. I told you that was going to be support last week, and that was ultimately the target. And we got down there, tagged it, closed green on Monday, and then just look at the volatility of the ranges here. I mean, you can see the ranges of these candles here back in October and previous months, and look at the volatility and the ranges on these candles here in the month of January, and just all sorts of volatility going on this past week. S&P 500 ultimately closing green for the week, however, lots of volume there, and we did hold the 50-week moving average, which is ultimately a net positive. This was helped by Apple's earnings. So Apple did report earnings. They were up 7% on Friday after reporting Thursday. Got up into this necktie of the 50 and 20 moving average on the daily time frame. So a little bit of resistance there, but ultimately a net positive for Apple, a net positive for the market. Microsoft reported earnings earlier in the week. That was not enough to lift the market. Neither was Tesla's earnings, and Tesla actually closed lower for the week, getting all the way down to sub 800 before closing at 846 on Friday. But really it was all about Apple. Now we are into the heart of earnings season. Typically, these tech companies report all together. This time, they are reporting a little bit separately. So next week, we do have Google, Amazon, AMD, Facebook, Qualcomm, and several others. We have PayPal. We have some non-tech stocks, UPS, and I believe Alibaba and Exxon report next week as well. But again, we are in the heart of earnings season. So this can push the market around, but ultimately, Apple is the big winner. And that has kind of, for now, this is a net positive for the market, net positive going into the weekend. And, at this point, the market, again, we talked about how it's been oversold a little bit lately. So it's likely that we probably get a bounce into next week. And there's really no bigger company to report than Apple. And for right now, that is a net positive for the market. So we'll give it the upside bias for now. We always look at the semis, and we always look at the semis for a leading indicator. They were weak going into the middle of the week. We had Intel report. Market did not like Intel. Abbott reported, and so did Lam Research. And those, market did not respond very well to Lam Research, Intel, or there's Intel or Abbott. Although Abbott did get a bid off the lows on Friday here. Again, probably a little bit of a sympathy bid off of Apple. But again, semiconductors did hold the lows. We look at the SMH here. They did hold this key level of support here, which is a previous all-time high around 258.59. So, we'll give it the upside bias for now. Cloud software, VDIGV, did close green on the week. This has been a laggard in the last couple of weeks here. We talked about this bearish pattern, and we said this was going to go lower. It has, but it did hold the 100-week moving average for the meantime. So we'll give the upside bias. A lot of these tech stocks, beaten down as they might be, and deservedly so. A lot of these growth stocks, ARK, Teladoc, Peloton, the list goes on really. Zoom, a lot of these stocks here, just trading at ridiculous multiples, and in really an environment where the Fed left rates too low for too long. And it's not surprising to see them sell off as much as they have. Now that the free money is being, pulled away a little bit here, not surprising. However, at the same time, with how beaten they are, look at stocks SE, look at this. I mean, look at this downtrend here compared to where it was. Just pretty amazing. But, at the same time, deservedly so, but also probably deserving of a little bit of a bounce here. So it would not be surprising to see that happen over the next couple of weeks. And then maybe we'll resume a little bit of a downtrend. But for now, we'll kind of give the upside bias to the market as it did get a nice bid off of Apple's earnings. Let's look at the IWM. So Russell 2000, it was leading a little bit. So the market was selling off pretty sharply last Friday. And the Russell was actually holding support a little bit. And on Monday, the Russell actually got a nice reversal bar here. On Monday, engulfed essentially Friday's candle. And really, I don't know what happened between Friday, Monday, and the rest of the week here, but the Russell 2000 has been lagging. So the Russell started lagging. It was leading last week. And not really a bullish look here for the market overall. But, Russell's still holding support, held that 190 level. If we flip back a little bit farther here, you can see there's this little pivot low here, going back to really essentially January 2021. So we closed this gap here on Monday, and then we got down to this little pivot low. So it did hold that. It held Monday's low, so we'll give it the upside bias for now. But Russell's still kind of lagging the rest of the market, which is generally a bearish indicator. You want to see small caps leading. The real leader in the market, though, has been the Dow, as we're looking here on the DIA here, Dow Jones Industrials ETF. We did close this gap on Monday, got all the way down there, tagged that, and the Dow closed green on the week. The Dow has been the leader, and that's generally not really a bullish indicator. You want to see the NASDAQ leading, you want to see the Russell leading. Look at the volume here, by the way, on the weekly candle here. So major volume there for the Dow Jones. But you don't want to see the 30 blue chip stocks, boring stocks like Walmart's and the Nikes and stuff leading. You want to see the risk on stocks leading if you're looking for a bullish environment. And that hasn't been the case, and we've said that that won't be the case with rates rising. So not surprising to see the Dow leading here, but it has been. You did break down this trend line. We could probably get rid of this now. Got all the way down to this gap fill. You held that support, and in the near term we can see the Dow getting up to possibly where this previous yellow trend line was, somewhere in this area around 355. So 35,500 on the actual Dow Jones Industrials, somewhere in that range. If we do get a bid, there's the actual Dow Jones Industrials. That would be kind of your near-term target here. But again, the Dow Jones has been leading the market, and I do expect that to continue at least through the first quarter, possibly through the first half of 2022. Anyway, so we talked about rates. So rates continuing to kind of back and fill this week here. Did get a nice pop on Wednesday, did pull back off the highs though Thursday and Friday, and you see the 10-year here, it is consolidating. Got this nice pop inside bar now just below that 200 moving average, 200 week moving average. Same thing on the 30-year. Nice pop here a couple weeks ago, and then just really backing and filling. So setting up bullish patterns here. And again, we're looking for a move on the 10-year up to about 2 to 2.1% before it really runs into some major resistance. Could it get through that? Perhaps. It probably gets up to 2.4 if that happens. On the 30-year, you'd be looking at somewhere around the 2.3 range before you run into major resistance, and then it could get up to maybe 2.8. But we'll evaluate that later. But really, in the near term, we're looking for that 2.4, 2.3 area on the 30-year, and the 2 to 2.1 area on the 10-year. And again, that will continue to put pressure on tech stocks. But we're looking, this is a bullish pattern here. You're consolidating right on that 200 moving average. And if the market does get a little bit of a relief bid here, especially in the tech sector, triple Qs, stuff like that, that would coincide with essentially the 10-year kind of pulling back and just backing and filling a little bit. And then a continued move higher from that would put continued pressure on tech stocks and the overall market, which could give you another leg lower in equities. So, that just be on the, on the lookout for that. And, that's kind of what we've been looking for over the last couple of months. And that is definitely a scenario that we think can play out. In any case, let's move on here to financials. So we'll quickly talk about XLF. So XLF did hold the 200-day moving average on the daily time frame. Did have a green week, and financials have been strong right now. We take a look at the broker dealers. XBD tested these lows here, basically got all the way down to the lows from July here, July 19th. We tagged that double bottom there, put in a massive tail candle. So broker dealers, tested these lows, held up for now. The XLF is holding up a little bit better, but essentially the main thing you want to watch for with financials is the yield curve, not just yields themselves. So everybody says like, oh, if the yields are going up, that's great for financial stocks. That can be the case. However, if the yield curve starts to flatten out and we start to see that 2-year creep up, that can be bad for financials, and it can signal recession. Right now we have out of control inflation numbers. We have the Fed that's trying to tighten. They're way behind the curve. We have an already contracting economy. There's supply chain problems that are getting worse, not better. We thought they were going to get better. They're getting worse. So, there's a lot of things going on right now. We have to watch that yield curve. And if it starts to invert, it's going to hurt everything, not just financial or not just tech stocks, but it's going to hurt financials as well. Anyways, let's move on here. Another thing that rates can hurt is home builders. They did hold up. Rates backed off a little bit. So we want to watch the home builders as well. So if rates start to continue to move higher, it's going to hurt the home builders. It's going to hurt real estate stocks. We're looking at the VNQ right here. So this is a real estate ETF. Again, getting a little bit of a bounce here as rates start to cool off a little bit, but another area that we want to watch here. So I don't need to tell anybody here. Rates are pretty much everything, and they're at the center of focus right now. And it's really why the Fed is in a box. But these are the areas that we're going to want to watch here moving forward. Let's talk about the Dow transports. So we talked about this level last week. I actually put a little trend line there. It did hold it on Monday. We rolled over a little bit, and then we got a bid on Friday again. Apple came to the rescue here, and we got a nice bid here on Friday, and we closed above that level there, that gap fill. So Dow transports are holding up, but again, a little bit of a weak signal this week. Barely holding the lows here, kind of looking like the semiconductors did. Kind of had a rollover, and then you got all the way down here to that 248 level, and you're able to save it by the end of the week. But a lot of areas looking weak, just overall, and this market does look vulnerable, to be honest. There's been a lot of talk about the overnight bids here on the futures. The E-mini, there was a lot of money spent to keep the futures flat. I think it was Wednesday night. And that's typical stuff. I don't need to tell you guys that. You guys are pretty well informed, but this is the way things are. But again, they did hold some critical levels for this week, and we'll give it the upside bias for now. Anyways, let's talk about energy. This is actually a strong sector here. XLE, and what can you say? It pulled off the highs a little bit on Friday. It is, struggling with this kind of 65 handle. I told you guys that 65, 66 would be resistance. It did get through that, got up to 67, pulled back a little bit, and now it's, it's just hanging in there. It's hanging in there really well. The XOP also here, oil and exploration, much, it's a little bit off the highs, but look, compared to the S&P, I mean, look at how well it's holding up here. OIH, same thing. Got all the way down to that 200 moving average, nice little back check, and then a pop here coming off the highs. But again, compared to the rest of the market, this is holding up really well. Crude, again, continuing to make 52-week highs. So even as it pulls back, finished flat on Friday, 1, 2, 3 52-week highs in a row. The previous week, 1, 2, 3 52-week highs, little pullback, and then made higher highs again. So crude is holding up really well. It's just been a powerhouse right now. And a lot of the time when you see, rotation out of tech stocks, a lot of the time that rotation goes into energy. So just be aware of that energy is just a strong horse right now, and it's receiving a lot of money flow. So, if you own it, again, I told everyone on Friday, trail your stop. If you're a swing trader or if you're a position trader, just trail your stop. And if you own this, let it, continue higher. If it wants to go higher, trim profits on the way up. On the monthly time frame here, there's nothing to say this can't get to $100, especially if we close the month above 85.41, which seems very possible, as we only have one day on for the rest of the month. That would be this Monday. So if we close above 85.41 on Monday, that would be confirmed close above the previous 52-week high, which again opens the door to possibly a move up to $100. So if you own it, congratulations. Continue to just trail that stop. We did trade this with the members on Carnivore Trades. We traded the UCO, which is 2 times long crude oil. We made some nice money. I didn't think it was going to go this high this quickly, but crude's just been a powerhouse, especially with the geopolitical issues. But nice move there on crude. Also, nat gas. There was some reports about a short squeeze that happened this past Wednesday and Thursday. So it did look like somebody, maybe a government or somebody who doesn't know what they're doing, did short it pretty heavily off that 100 moving average here to keep it below $5. Clearly, there was a squeeze after that, and nat gas has ripped higher. I thought we would get one more little leg down here in nat gas. Did not quite happen, but the market's not always perfect, and your analysis isn't always going to be perfect. So sometimes things get away from you. But in any case, nice little move on nat gas. I don't necessarily have any sort of read on this as far as a short to medium term trade. I do think that there is a bull market in nat gas going forward. However, if you want to trade this on a short to medium term basis or even a swing trading basis, you need some kind of a pattern. So it does need to consolidate a little bit. If you look at the weekly time frame, you want to see it maybe go sideways a little bit for a little while, and then from there you can probably look to own it and maybe take it long. But For the meantime, look, it's you know, down, up, down, up. It's just all over the place, trading like an altcoin almost. So nothing really to do with it here, at least on a shorter term to medium term perspective. You just need to wait for pattern here on nat gas. Anyways, let's move on here to the dollar index. So dollar index continuing to pop higher here. We said that this was going to be a buying opportunity, this 100 moving average and this 20-week moving average also coinciding with the 200-week moving average. Nice little weekly pattern here. Again, huge pop this week. This should get up to about 99 or so. Doesn't mean it happens in a straight line, doesn't mean it goes straight up there, but we are expecting that type of a move here. And so continuing strength here from the dollar index. Let's look at gold. So I warned about this with gold. Again, post OPEX, this is the third time it's happened. And, you know, they ran it up into OPEX and then they rolled it right over, ran it up into OPEX here in November, rolled it over, ran it up here into January, and now it's rolling over again with the higher dollar. So basically what you want to watch for is these two trend lines here. A break of either of these. So a break of this one on the lower side, sending down to 17 to possibly 1675, excuse me. A break up of that would send you to 19 to 1950. But however, it is interesting how the Fed has their little rate hike scheduled for March, and these lines start to converge pretty closely right around that time. So it's probably not a coincidence. However, it'll be interesting if gold stays in this range somehow up until that point in March when that rate hike is scheduled. So we'll continue to watch that, but essentially you want to watch those two lines there, and that will essentially tell you where gold is going. Silver, a little bit weaker here. Talked about this Friday. So we broke that trend line. Ever since we broke that trend line, really from last September, silver's just kind of been in this range. It's been a little bit softer. You do have this short-term trend line that did hold by Friday, but again, silver just continues to be kind of in a choppy kind of ping-pong range. You know, if you're able to get above this pivot high here, you can get up to 25.50. If this breaks down, your downside is to 21.50. The other metals that have been strong is platinum. You want to see platinum consolidate a little bit more, and then it can possibly get up to past 1100, maybe even 1150 if it consolidates enough. And palladium, which has been a powerhouse off of the Russia geopolitical tensions. So this one is very news driven. It's a little long in the tooth short term, and it is into some resistance, but palladium has been strong, so we'll give it the upside bias for now. Doesn't mean it can't do some backing and filling or some retracing in the near term, especially if those tensions you know, subside a little bit. But palladium's been strong, basically off of the Ukraine and Russia tensions. Anyways, moving on to copper here. So copper did take a dump here, closed below this 434 area that I told you was going to be key support. Now we have to go to our weekly chart. So basically, the level you're looking for here is 425.55. If you close below that on a weekly basis, copper goes down to about 360, 370. If it can reverse that and close back above 451, and you know, ultimately we'll call it 460, then it can go back to this kind of all-time high around 488. But in the near term, I'm going to give copper kind of a little bit of a slight bearish bias here, as I would have liked to have seen it break out by now, and the fact that it's not breaking out already tells me that it probably wants to break down instead. But as long as it holds 425.55 on a weekly closing basis, I'll give it the slight benefit of the doubt. Anyways, let's move over here and talk about Bitcoin. So Bitcoin, again, able to close slightly green on the week. So we did have this dump last week, just like everything else. Again, the targets haven't really changed here. Getting kind of a weak-ish bounce, just like the rest of the equity markets. Notice how you had these bear flags on the way down here on Bitcoin. You know, you had 1, 2, 3, this is a small one, and then 4. Now having another one here where you did run into major support. So if the equity markets do get a bit of a bid, which I do think they do over the next week or two, I could see upside targets here on Bitcoin. Your first area is about 42, 42.5. If you get through that, you can get up to 44, maybe 45,000, you know, and possibly, you know, back test this this trend line here, which was your head and shoulders breakdown. So if this head and shoulders pattern plays out, I think I have it running down to about 17 or so thousand, which I know seems like a long way away, but you know, Bitcoin has had 80, 90% drawdowns in the past. So it's not really far-fetched to think that it can't happen again, especially when you have a technical pattern that suggests that's exactly where it is going. So, you know, in the near term, Bitcoin can hold up if the equity markets hold up. This is essentially trading like a 3 times leverage ETF to the equity markets. And yeah, essentially your targets here are 44,000 to 45,000 on the upside. And if this does break down with the rest of the market, I mean, your levels here are 28,000 is pretty clear. You know, that's your previous 52-week low. And then if you get through that, you know, you're looking at that 20,000 handle and possibly 15,000 on an overshoot. So that is what I'm seeing there on Bitcoin. I know it seems ridiculous, but, you know, again, I'm not suggesting anything that hasn't happened before. We've seen this happen before on Bitcoin. Anyways, flipping back over to the equity markets, again, I do think we get a bit of a bid here, possibly up to that 450 area. That would be kind of your first major resistance. On the triple Qs, it would probably be around 370 or so. So if you're following the NASDAQ, that's going to be your kind of first resistance if we do continue to squeeze up a little bit in the near term. Ultimately, I don't think that changes the long-term outlook. I still think we have some type of another leg lower, at least into the first quarter to first half of 2022. Anyways, guys, you guys take care. Thanks for watching. Give the video a like, thumbs up. Subscribe to Jason's content, subscribe to his Patreon. Come check me out on my website, carnivoretrades.com. That is brand new. That is up and running now. It's awesome there. We're doing swing trading. We're killing it right now in this market. If you want to get in on that, check it out. Anyways, take care, and I will talk to you all next week.